Hi everybody, welcome back to the channel. So today was a pretty interesting day in the stock market. Pretty much everything went into the green. It looks like technology companies especially people are going back into, and yesterday there was quite a sell-off in oil, but it seems like today, as of Thursday, it seems like people are buying back in. So I'm just gonna tell you what my buys and sells were for this week. And if you want to follow along with my investing journey, feel free to hit that like button, subscribe to the channel, and share the video. All right, with that said, let's roll the intro. So in the TFSA, we actually had a pretty decent day in the markets today, up $180 today, or 1%. Past week we're actually up 2%, so we're up $310 this week. Past month we're still down 5% overall, just due to the market-wide indiscriminate sell-off where people are just selling off companies, regardless of how they're doing. Quality doesn't matter, just everything's being sold off, whether the company's doing good or bad. And the past 3 months have been especially brutal, down 16.51, 43 cents, or down 10% in the last 3 months. But the way I look at it is, if it can go down this much in 3 months, it can also go back up that much in 3 months. And past year, we're down 6%, or about $839.08. And all time, we were climbing back, and we're almost back in the green. We're only down about 3%, or $400. And as you can see, you can make that back, even in one trading day. So one thing you have to keep in mind with investing is that, your portfolio is going to go up and down all over the place. If you see that, your stocks are falling down and it's, causing you to worry, maybe you want to reevaluate, how much money you have in the market or the type of investments you're doing. Maybe single stocks aren't for you. Maybe an ETF would be better, or like a mutual fund at a bank where you don't see the daily fluctuations from day to day. So we can see that Apple has rolled back into the green, and they have a pretty big announcement with their new Apple Watch may actually be able to detect if you have a fever. So that would be a pretty game-changing feature to have on a smartwatch. And, it's gone from just being, just this gimmicky little, why would I need a smartwatch, to a fitness device. Now it's turning into a medical device where it can, tell your heart rate, you can monitor your blood pressure. And now if it could tell you have a fever, that's just incredible, especially with the way the world is now. So I like that Apple can just, shift and adapt. And if they see that a company's doing well, like Fitbit, for example, they said, oh, a smartwatch, that's a wearable technology, that's a good idea, we should probably do that. And they just absolutely destroyed it. So any new innovation that comes along, Apple can just go into that business. Same thing with their recent killing of the Square reader, essentially, and POS terminals, because in iOS 16 you can actually make payments from iPhone to iPhone with no other hardware. That's absolutely just incredible, and it really shows that Apple is just going to adapt and always stay on top of things. They're always going to venture into new businesses, highly profitable. I mean, I'm not going to continue going on about Apple. I feel like I just fawn over this stock all the time. It's basically a perfect company, at least in my opinion. So that's why it's basically my largest position. So nice to be back on the green on this one. I wouldn't mind if it fell more. Unfortunately, it didn't, but we definitely stocked up on shares while we could. And Alibaba, the sentiment in China seems to be going a little bit better. It seems like the Chinese government isn't going to be targeting the technology companies as much. And another thing to note is that despite most of China being locked down, Alibaba still had growth in their last earnings report, unlike a lot of Chinese businesses. So that really shows some resilience, that even in the worst case scenario, they can still grow their business, because they are essentially just Amazon. If people are stuck at home, they still need to buy things. So that gives them some resilience. And they also have cloud computing with Alibaba Cloud. And I mean, they even have grocery stores, and they even have like a Costco-like store in China. So very diversified business. And they also have like Alipay, like they're even in fintech. This is just probably the most interesting and most robust company that China has to offer. And we can see that other businesses are still down. So like Brookfield is still down. The Canadian banks are actually at very, very attractive levels. Definitely not a bad time to start picking these up if you're light on your Canadian banks, or you're just starting investing. Definitely a good time to get these. Scotiabank's giving like 5.5% yield. It's just absolutely incredible. And we can also see that ETHY is still destroyed. It's like down 62%. So one thing I want to mention about this fund is that the fund manager tries to balance between capital appreciation, so the value of the stock or the value of Ethereum, and they also want to give you a bit of income. Unfortunately, because the stock is about down 60%, they're not going to write as many call options, which means your income will be reduced by about 60%. Now, the bright side is if it does recover, the income will go back to normal. So it's just the income is not going to be stable. It's going to rely totally on the price of Ethereum. So if you are an investor that's looking for something that has consistent income, I would probably give this a pass, or just you can do what I'm doing, where you have like 1% or less of your portfolio in it. So if it underperforms, or it even goes to zero, it's not gonna mess you up in your financial future should you decide to go into this. And Google is going to be splitting on July 15th. So I haven't purchased any more shares, but I will definitely be doing a buy in a couple of days' time. I'm definitely going to be getting this. I think it's trading at a very good valuation. And splitting 20 for 1, it's going to be trading a little over $100, and it should get more people interested in the stock and using options. So it could give it a nice little boost in the price, but I still think it's at a great value, and I can still average down on this one. Great business. So we purchased one more share of Intel here, so we went from 17 shares to 18. And one thing I want to mention is just that there is definitely some news out there that, from Micron and even motherboard manufacturers, that they expect 2022 to have weaker sales of about 20 to 30%. And even Intel's reporting that they're discounting their Alder Lake CPUs by 5 or 10% to vendors for pre-built machines or laptops. And they don't usually do that until they have a new generation processor. They only do that for old ones. So the vendors seem to think that the demand will drop off, and that's probably due to how the pandemic was and how it kind of pushed all the demand forward. People got their work from home, and now people are probably going back to the office, so they probably don't need to spend all this money. And then they're also worried about inflation, and then they're worried about a recession, and all those things tend to lead to people spending less money on discretionary items. And I don't think computers are completely discretionary, but it may not be a good cycle for them. The reason I'm comfortable adding Intel is because the stock is already beaten up. I mean, it already has pretty much the maximum fear and negative sentiment you could ask from the market. So totally comfortable adding more shares of this. And we also picked up one more share of Telus. So they paid us a dividend of $8.47. So I decided to buy one more share of Telus. And we're also going to get more dividends later in the month. So I'm planning to get my Canadian dividend stocks up to the point where they can buy one share of themselves every quarter without me adding any additional money. So every time Telus pays me a dividend, I'm going to buy a full share of Telus. Every time Power Corp pays me a dividend, I'll just buy a share of Power Corp. And then with the banks, I'm just going to reinvest the dividends. I won't buy full shares. They're a little bit pricey, but I'll do fractional buys into them, especially at these prices. I really like the prices that they're at today. And I also bought a little bit of TD Bank with the rest of my deposits. So, I mean, this is below the first shares that I bought at $83. So, and it was right before the ex-dividend date of July 7th. So we bought some on the 5th of July, and then I bought more on the 6th. So we will get the dividend at the end of July. So great price, great bank. And for the dividends earned in the portfolio, we've earned $586.89 since starting the portfolio. Annually, our dividend income increased from $782.98 last week to $787.48. So, an extra, $5 almost. Not bad for a very small deposit. I just got my GST, so we just reinvested that into my TFSA, so a little bit of extra money, and I will be making a bigger deposit in a few more days and buying more stocks. And the monthly average went from 65.25 to 65.62. The weekly average just went up by 8 cents, so an extra 8 cents per week. And daily, we're making an extra penny every day, so instead of $2.15, it's $2.16. So we're getting closer and closer to that $3 a day goal. Just have to keep buying more dividend-paying companies, and of course, they can also raise their dividends, and that can push us closer to that next little goal I have. And then the months it takes to earn $100 has decreased again. So there's another way that I track my progress in the portfolio and the compounding effect of my dividends increasing over time. So 1.53 to 1.52. Hourly, if our portfolio was to work a 40-hour week job, still 38 cents. Again, very, very small deposit. We're going to continue to dollar cost average. Anytime I have spare money, I'm throwing it in the portfolio. I don't know where the market's going to go. Nobody does, honestly. And quite frankly, the best time to be buying stocks is when nobody wants to be buying stocks. So when people are afraid, when people are depressed and they sell all their stocks, that is actually the time to be excited and get in the market. So if you are wanting to start investing, or you want to have commission-free trades of Canadian listed stocks and ETFs, you can sign up with Wealthsimple. I have a link in the description below. And if you sign up for that, you can get stocks worth up to $6,000 and give you a nice little boost in your investing journey. Start your own passive income, or however you want to invest. And on the watch list, we still have Costco, still nowhere near my target price. And I'm also considering starting a position in Lowe's in my RRSP account, just because the price is looking pretty attractive. It's near what my target is. So that's pretty much it for this week. Don't forget to like and subscribe to the channel and share the video. And in the comments, tell me what your favorite dividend stock is. It could be Canadian or American, just any company. All right, have a great day, everybody.